Full house of experts to take us through what the expectations are today and more importantly for the quarters to come, for the months to come. So well, we've got all our experts here with us. In fact, today we'll be joined by Narendra Taneja, who's joining in from the capital to talk about the bigger regulatory challenges and the question marks that hang before RIL right now. Prayesh Jain, of course, who tracks the numbers and the valuation of the stock very, very closely at IIFL. Prayesh, thanks for joining in. And Hemant Dharnidharka of SJS Markets, who's also been looking at RIL's funding options and really what it's doing with its cash flow. Okay, gentlemen, thanks for joining in. Morning to all of you. Let's get Hemant into the conversation as well. I think we have his audio line back. Hemant, that's the other part of the puzzle, right? While RIL over the last 1 year has been continuously making statements about their interest in the consumer side of the business, changing the face of the company, the market doesn't really want to give it that value right now, and it's very focused on what's happening with KGD6. But you're reading on the core of Reliance's revenue right now, which is refining and petrochemicals.
On the petrochemical side, the revenue contribution is much higher and the profits are not really commensurate. What Reliance has been doing is that they tried to keep their margins higher than what Singapore had, and now for the first time in the last couple of quarters, the margin GRMs of Reliance have been lower than the Singapore margins. Unless they are able to get that back up, it will be very difficult for them to actually show a higher earning going forward. In addition, on the new businesses they are investing, while they have begun investing the money, there is nothing coming in from there in terms of profitability. Till those profitable drivers come back, we won't see an increase in profitability, and if the profitability is not going up, if the absolute profit is going down, the stock and the bond market both will continue to look at Reliance with skepticism.
Prayesh, comment on this important point that Hemant has raised, and it's true. I mean, this was a company that always used to lead, or almost always used to come out with better refining margins than what was happening with Singapore's refineries. But that has changed over the last couple of quarters. What's the big problem here?